Time for another stock review. This time we're talking AI, artificial intelligence. Yes, and this time we're talking about AI voice control. So in this review, we're going to go deep dive into the figures and whether you should buy this stock, whether you should own this stock, sell it, or whatever. We're going to find, look at the balance sheet. We're going to share with you also the latest news on the stock. We're going to give you a full back test on the stock. This is completely unbiased. I don't own the stock. I only own the S&P, so I can be completely impartial. We're going to look at the customers, latest news, who's involved with this company, and give you a profitability score, solvency score, inside trading, the whole works. So sit back and relax. We're about to go full AI, and I hope you enjoy this video. If you do, please do tap the like button and share it out to more people. If you don't like the content, please click the down like button. That way you won't see my content anymore, and you'll get to find out what you really want. We're here to provide the best, most honest information to give you an informed choice how to make decisions on the right stocks for you. So let's get into it. Let's have a look what SoundHound is. So let's start off nice and basic with the basic information, and then we'll dive deeper into the stock. So here is SoundHound. What is it? As you can see here, we opened up in 2022. We're going sideways for a while, popped, and it fell. And it's been going pretty much sideways as a penny stock. Anything under $5 is a penny stock, and we are at $1.67 right now. Let's have a quick look at what SoundHound is. It engages in the development, owning, and commercialization of voice, sound, and natural language, artificial intelligence technologies, and related activities. The company was founded in 2005 and is headquartered in California. Let's show some more information. The listed name is SOUN, SoundHound. There we go. Now, Kaivan Mohaya, I hope I've pronounced that correctly, and I apologize if I haven't. Kaivan Mohaya, if you'd like to reach out to me, if anybody here invests in SoundHound and would like to contact investor relations, it's best coming from you. I don't reach out to anyone. I just post my content. We rank #1 for the word stock, and many companies to do with stock, which is kind of every company. And if they would like to reach out to me and be on the show, they can call into the show, be live, and we can interview them or record them. If they'd like to be involved, if you'd like to message the company or get in touch with investor relations, please do. I would love to hear from Kayvan live on the show. We have a Meet the CEO series. Employees, 430 since 2005. Maintenance is 100%, so it's regarded as high risk if you are using margin. 414 million is the market cap, so it's not a large company. That's only the price of the outstanding shares. That doesn't mean that's the value of the stock. That just means what people are prepared to pay for the stock. Okay, so the price to earnings ratio is negative 3.64. The 52-week low is $1.49, and the 52-week high is $5.11. So we have a bit of volatility. No dividend here. Low volume, 6.6 million, not a massive, highly traded stock. So if you are buying the stock, you might find that you get in and can't get out at the price that you want. You might have to drop your price to get out of the stock. Morningstar are giving this a review. What do we think of this? I don't like Morningstar or anybody else that gives their reviews, to be perfectly honest, like this, when they're paid to do so, because you can never really rely on those reviews. They are very biased as they're paid to do it. I do this for free. You can see they've got a strong buy rating. If we look at it right now, you see the buy rating is 100% buy. That doesn't mean to say it is a good buy. We'll come on to the analysis and the numbers and intrinsic value very shortly. Right, look at the earnings. As you can see, the stock price is the earnings are slowly increasing. Things are looking better bit by bit, but we are moving in the right direction. Wall Street are doing a reasonable job here, getting it right pretty much most of the time, but we are moving in an upward direction. That's good. Let's see, however, who we are in bed with. In other words, what other companies the investors are investing in. Big Bear, I don't know anything about that company. I've never reviewed it. C3 AI, I've made money on this stock before. AI can be very much overbought right now. Everyone's loving it and getting in on it. So it can attract the wrong attention. And there is some wrong attention there. We don't want to be in a stock that's surrounded by mullen investors, because it's gamblers, corruption, false information, really, really bad, pump and dump schemes all over the place. SoFi, another one. Oh dear. SoFi, another one. The CEO talks rubbish. ChargePoint gets a lot of bad news as well. So, which means the stock is going to get a lot of volatile news. Now, that doesn't mean to say the company isn't worth investing in, but it does mean that the stock is going to have a lot of volatility up and down on the markets. We're going to see the money come up, the money go down, and it is going to present some extreme volatility. The company might be great, but the people that are buying it are also buying other stocks, which they like to pump and dump. So, just got to bear that in mind. Remember, I'm not here to promote the stock. I'm here to help you, my viewers and members, get the best information. All right, let's have a look now at the company itself, because we are talking AI today, and we're talking AI in the context of audio. So we're bringing people together with AI, and let's have a little look at the company. So without further ado, let's go straight over. About SoundHound. This is what they're about. We believe every brand should have a voice, and every person should be able to interact naturally with the products around them by simply talking. Sounds great, like you Alexa. Hello, hey Alexa, turn the lights on, this kind of stuff, right? What we do, SoundHound's independent voice AI platform connects people to brands through customized conversational experiences that voice-enable products, services, and apps, while giving companies access to their valuable data and analytics for greater control and brand ownership of the customer experience. My experience of this is, even though it's kind of cool and fun at first, I got to be honest, I get fed up with just using my voice. I don't know what about you. I just like to turn the switch on and turn it off. Even though it's easy to go lights on, I just like to go, press the button. I don't know about you. I think everyone's got excited about it. I don't know if it's the future. We're going to say everything, we'll just be constantly talking all the time. Anyway, this is very interesting. These are some of the companies that are in association with SoundHound. We've got Stellantis, Hyundai, Qualcomm, Kia, Honda, TOG. There you go. There's a few companies. Restaurants, White Castle, Toast, Square, Oracle, Olo, Qualcomm, Motorola, Vizio, Snap. As you can see, Pandora. Quite a lot here. So there's just a little flavor of the company it keeps. We've got a bit of breaking news just out a couple of weeks ago, and AI's first year knew how voice reshaped the conversational ecosystem. Let's have a look at this, right? Let's take a look at this. We live during one of the most connected periods of human history. At last, and that is a trend that is only set to accelerate, particularly now that we are a full calendar year into the advent of generative AI. After all, connection begins and is defined by expression, and the expansive capabilities of multimodal AI, when applied to voice recognition, interfaces are already transforming the way individuals and businesses alike interact. This, as the drumbeat of 2023's voice AI announcement saw the intelligent conversational technology packed as the primary user interface of the world's first purpose-built AI device, integrated into quick service and fast casual restaurants across America, and further fine-tuned as AI systems from Google, Meta, OpenAI, Anthropic, and other industry players push forward with voice-driven interaction. So what do you think of all this? Do you think we're in a world where it's all going to be voice-controlled? I mean, I have to say, I'm not fully convinced by this, but, what do you think? We'll be surrounded by robots soon anyway. So what do you think? Is the AI chip taking over? Well, Let me know in the comments below and I will reply to all of the members. What do you think? Anyway, let's go further now into the actual numbers of the business. This is essentially what it's all about, and I'm going to give you now some values and let's see what we come up with. So first of all, let's look at the intrinsic value. This alone is not enough to base your investment decision on, but nevertheless, it's a good place to start. If you're enjoying this video so far, please do tap the like button. I'm doing something that nobody really does on YouTube. I'm making this, and all these effects you're seeing and everything that's happening, I'm doing this live. There's no editing here at all. I do this for the purpose of everyone knows that it's real, genuine. I don't go back and edit anything. So if you like the fact I'm making this live, literally on my own as I do it, please do tap the like button. Or if you don't, please tap the down like button. That's absolutely fine. And then you'll be shown the content that you really want. Now then, sound intrinsic value. Looking at it here, base case. It's overvalued at the moment, of 32%. That's where we're seeing it, overvalued at the moment. The best case, which we're certainly not in, a best case is low inflation, no negative macro conditions, where we have plenty of that. I'm not sure how it would affect this company though. And the worst case scenario, we're overvalued by 38%. But that doesn't mean to say it is overvalued. Let's look at this here. SOUN's intrinsic value estimate is unreliable because it is based only on multiples and doesn't use DCF valuation. Remember, we can't do everything at the moment because the information is not there from the company. So intrinsic value, as useful as it is, it's not complete with this company because they're not meeting all the metric requirements for us to be able to do that. So valuation history, as you can see, that's missing. Okay. In their last earnings call, the company reported a year-over-year operating loss improvement of 46%, net loss improvement of 33%, and a more than 40% improvement in net loss per share. Non-cash stock compensation was 6.7 million, contributing to a 14.5 million operating loss. They also noted a net loss per share improvement from 15 cents to 9 cents. Net cash used in operating activities improved by 26%, with a cash position of 110 million at quarter's end. Looking ahead, the company confidently projects Q4 revenue between 16 million to 20 million, with expectations to achieve adjusted EBITDA positive, marking a significant turnaround. Upcoming financial revision and are also noted, impacting certain balance sheet metrics without affecting reported revenue, gross margin, operating margin, adjusted EBITDA, or cash balances. Okay. Let's look now at the financials. Very, very important. We've always got to look at the numbers. There's no point just looking at the fundamentals. We have to look at the numbers. Does it all make sense? Well, let's go into the numbers and see. Please do tap the like button if you are liking this, and I would really appreciate it. Okay, the revenue up 6% on the most recent range, and we are expecting things to consistently move up, which is good. Operating income does seem to go up and down. That's probably to do with capital expenditure. And if we look down, it is. We're making investments more than less. So in the most recent range, up 13%. Net income, up 7% on the most recent range. Cash flow, up 8% on the most recent range. Capital expenditure is down 26%, which is good. We're spending a bit less. Operating cash flow up 8%. Those figures were looking pretty good. What about now the balance sheet? Very, very important to look at the balance sheet. We don't want more assets than liabilities. We don't want too much debt, and cash on hand is always useful to invest or reduce debt if we need to. So assets, we've got 144 million, 96 million of that is cash. So that's great. We've not just tied up with physical assets. We've actually got cash to make investments, reduce debts. That's good. Let's have a look at the debt position, 118 million. So it's the right side of the balance sheet. Long-term debt is 83 million, is the majority of their long-term debt, of their liability. So we don't like that. 83 million, nearly all of their liabilities is debt. In fact, we can see it's actually 70% of the pie. So that's quite a lot, but we've got 83 million in debt, but we have 96 million in cash. So we can wipe out all our debt tomorrow. So I'm expecting when we get further into the review, the solvency score will be fine, and the profitability score is starting to move in the right direction as well. Margins, 73%. Now that sounds great, gross margin, but of course we need to compare it to the competition. I'm going to give you links in a minute so you can go to the competition and compare it and make an informed choice whether it's a good a company or not. Operating margin is moving, starting to move in the right direction, even if it is negative. Net margin also move in the right direction. FCF also moving in the right direction. So some positive signs here, even if we are negative on many metrics. Okay, here we go. Profitability score is 28%, 28 out of 100. We have positive gross profit, exceptional revenue growth, exceptional one-year growth. All that's good. The only thing negative is negative operating income. No surprise right now. So we move over to the solvency score, and as you can see, we're not a bright green, we're not Apple or Amazon, but 32% isn't too bad. Short-term solvency is good, negative net debt is good, long-term solvency is good, just high DE, so which is negative. So we've got a 32% score. It's reasonable. The company isn't going bust anytime soon. It's not red. It's not exceptional. We just need to start making some more profit and we can move in the right direction quite quickly. Okay, let's have a look now at some more numbers. Let's have a look at Wall Street. Now, Wall Street are giving us a nice target now of 176% upside. We've got a 214% upside at the best case scenario, but at the worst case scenario, we are looking at 118% upside. So we're looking quite good here when it comes to Wall Street targets. Might be worth an investment here. Now, before we get too excited, we might want to look into the competition, see what the competition are doing. And here we have the competition. There are quite a few on the list. I'll give you the link so you can go and use my software, and then you can decide whether they are better placed, better balance sheets, better margins, and so on and so forth. Let's go now to inside trading. We want to see who is buying on the inside and who is selling on the inside. Very, very important. If we are looking at a company, we want to see who's buying on the inside. Is there any confidence within the company? Well, all we've got so far is selling, I'm afraid. During the last 12 months, SoundHound insiders have not bought any shares and sold 9.3 million. That's not a good sign. We don't want to be seeing that. Plenty of insiders selling the stock, no one buying the stock. Okay, that's not so good. We've also got a lot of short interest here as well. That's not good. We've got 15% short interest, not enough to give us a short squeeze, but enough to drive the stock down at the moment. And with the insiders selling as well, that's not really helping the situation either. So there we go. We got 15% short interest, not enough for a short squeeze, but and enough to drive the stock down. Now, we've got some news here just a week ago, so I'm going to have a little listen to this. Let's have a listen here, and let's give it a little listen right now. Here we go.
Where, when, how?
Thanks for having me. We are very excited about the announcements. Jersey Mike's has about a little over 2,500 locations. Usually brands like this start with one or two before they expand, but we are starting.
We're looking at, of course, the CEO of the company talking about a partnership with Jersey Mike.
50, which is great. And we are starting the year with over 10,000 live locations across multiple brands and over 100,000 locations in our pipeline.
Kayvan, what is competition like for you now, given the world has suddenly embraced generative AI?
So SoundHound has three pillars of business. In the first pillar, we provide a branded AI assistant to products like cars and TVs, IoT devices. In the second pillar, we have AI customer service for businesses like restaurants and beyond. And in the third pillar that's coming in the future, we bring them together. So while you're driving, you can order food by talking to your car instead of talking to the restaurant, which brings our pillar 2 customers to our pillar 1, the users of pillar 1 customers. So something changed last year. Generative AI and large language models really changed the landscape. SoundHound is 18 years old. We've been developing the core technology in conversational AI for almost 2 decades. But when large language models change the landscape, it really accelerated our path to adoption. And competitors, the big tech players, have to build their own large language models. So it takes them a couple of years. And then the smaller companies...
Keyvan, we just have 10 seconds left. This an exclusive deal, or you phone in Jack in the Box and Wendy's next?
It's not exclusive. We are in over 25 brands already. Like Wendy's, I'm sorry, not Wendy's, White Castle. And that's the one we've announced.
There we go. So you've heard a little bit there from the CEO. What we want to do now, though, is lastly go and compare. If we were buying this stock, how does it compare to the S&P? Now, I know that's a completely different thing altogether, but it's important to do that because as an investor, you've got to always look at the benchmark. So if you put $10,000 in 2023, that's as far back as we can go, I'm afraid, with SoundHound, we would be now at 9,379. We're just under our initial investment, and on the S&P, which is in blue, we would be at 12,000. So I know it's only 2023, it's only a year, but it's just worth looking at it. You can see we've got much more volatility with SoundHound. As time goes by, this is going to get much greater, but that's where we are right now. So my thoughts, what do you think about this? Would you invest in SoundHound? Well, it's very, very difficult to pick the winner when it comes to AI. I prefer, first of all, I don't invest in any individual stocks. That way I can be a completely impartial analyst, review stocks. I'm not giving my opinions. I'm just giving you the facts as I see it. For me, I invest in the S&P, which is Apple and Amazon and things like that. Now, those companies within the S&P can buy out these kind of companies very easily. So if you are investing in an AI company, do you invest in Amazon and Apple, which might end up owning everybody else, and Microsoft and Google? Or do you invest in the S&P and just get the whole basket? Or do you invest in an ETF, an AI ETF, maybe an ARK Invest ETF? I don't know. For me, this is not a buy right now. There's a few good things here, but it's high risk. So for me, I'm not going to give it a buy or a sell. I think I'm just going to keep my options open on this one, do another review, get some more information and see how it goes. I don't like a stock that is so cheap now. 168 is a penny stock. It's going to need to raise capital. That's always a problem for shareholders. But anyway, what do you think? Leave me your thoughts in the comments below. If you click above my head here, I'll give you all the links to my social media where I'll reach out to the company if they want to contact me, and updates on my X account. Also below in the description, you'll find the link to this software that I'm using. My members can get a free plan, a completely free plan to use. If you are a member of mine and you want to get the full premium plan, you can basically get my membership for free with a discount that you get, a 10% discount. Then you've got the same resources that I have. You can review unlimited, as many stocks as you want, deep dive and all the rest of it. So there you go. If you do want me to review a stock for you, I'm doing this. I'm going through as many as I can, probably 100 stocks I'm going to review, and I expect to rank number one on YouTube for most of them, because I now rank for the word stock, which is pretty amazing as we've only been doing this for a couple of years. Anyway, so if you'd like a review, just comment below. It's a members only perk. If you want it done straight away, like the same day, do a super chat. It'll take it to the top and I'll do your review straight away. If not, it'll go on the list, and I'm working my way down the list, trying to get everyone's done over the next week or so. Anyway, there we go. More reviews down here. Check them all out. I've reviewed many companies, given you my thoughts and numbers on them using the most advanced algorithmic software. So it's not biased. I'm not paid to do it. I'm just doing it to provide the best information to my members. There we go, AI. What do you think of this one? Leave me your thoughts below. Smash the like button. And until next time, as always, take care of yourselves and each other.